Blockchain.
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 The financial industry is undergoing a significant transformation, driven by rapid technological advancements and evolving consumer demands for efficient and transparent services. Blockchain technology is at the forefront of this evolution, offering innovative solutions to long-standing challenges in banking. By enabling decentralized, secure, and transparent transactions, blockchain has the potential to enhance banking operations, making it essential for the future landscape of finance. As this technology gains traction, financial institutions must adapt to leverage its benefits while addressing inherent challenges, ultimately reshaping transaction processes in the digital age. This transformative potential calls for a closer examination of how blockchain can address specific pain points within the banking sector and facilitate a more resilient financial ecosystem, ultimately paving the way for a more efficient, inclusive, and secure financial system. Blockchain technology effectively addresses key issues in traditional banking, such as slow transaction processing times, high fees, and security vulnerabilities. By utilizing a decentralized ledger system, blockchain eliminates intermediaries, streamlining processes and reducing transaction costs significantly. Traditional banking often involves lengthy processing times, especially for international transfers, but blockchain allows for near instantaneous transactions, making banking more responsive to customer needs and expectations. The transparency inherent in blockchain fosters enhanced trust among users, as all transactions are recorded in an easily auditable manner. This visibility significantly boosts user confidence, which is a critical aspect of today's digital banking environment. Furthermore, the immutable nature of blockchain records protects against fraud and data tampering, alleviating historical concerns that have long hindered confidence in banking systems. As banks explore implementing blockchain, they can anticipate substantial improvements in operational efficiency, customer satisfaction, and overall service delivery, paving the way for a modern banking experience that meets evolving consumer demands and expectations, ultimately resulting in a more competitive financial landscape. Many banks worldwide have successfully implemented blockchain solutions, showcasing its potential benefits across diverse use cases. A major European bank improved its international payment processing by adopting a blockchain-based system, reducing transaction times from several days to mere seconds, while significantly cutting costs and enhancing customer satisfaction. In North America, another prominent bank enhanced digital transaction security through an immutable blockchain ledger, drastically reducing instances of fraud and increasing user confidence in their financial operations. Additionally, a multinational bank streamlined the issuance of letters of credit, cutting processing time from weeks to just days by enabling real-time access to documentation for all parties involved in trade financing. These compelling case studies highlight blockchain's transformative potential to revolutionize retail banking, resulting in improved efficiency, security, and overall customer experience, while paving the way for innovative financial products and services. The insights gained from these implementations offer valuable lessons for other institutions seeking similar journeys toward blockchain integration, emphasizing the need for tailored approaches to meet specific operational requirements effectively. Blockchain technology is redefining cross-border transactions by simplifying international fund and asset transfers. Traditional methods often involve multiple intermediaries, leading to high costs and lengthy processing times. By utilizing blockchain, these intermediaries are eliminated, enabling direct peer-to-peer transactions that accelerate processes and reduce delays. This shift not only enhances efficiency, but also lowers the overall cost of international transactions, making them more accessible to a broader range of users, including individuals and small businesses that have long been burdened by traditional banking fees. Moreover, blockchain facilitates real-time currency conversion and settlement, streamlining cross-border trade operations and fostering a seamless flow of goods and services across borders. Additionally, blockchain enhances security and transparency, significantly improving compliance with regulations while building trust among users. By fostering a more efficient and cost-effective cross-border payment system, blockchain is poised to transform the finance landscape, making transactions faster, cheaper, and more efficient, ultimately fostering greater global economic participation and integration, which are vital for sustainable development and inclusive economic growth. The security features inherent in blockchain technology are crucial for combating fraud and enhancing financial transaction integrity. Its decentralized structure and advanced cryptographic techniques make it exceedingly difficult for cybercriminals to manipulate data or conduct unauthorized transactions. Each transaction is meticulously recorded in an immutable format, ensuring that once information is entered into the blockchain, it cannot be altered without detection or consensus from the network. This feature significantly enhances the reliability of the financial system, creating a safer environment for both institutions and consumers. Additionally, blockchain's consensus mechanism prevents fraudulent entries from being added to the ledger, significantly enhancing the security of the financial system. This protection is particularly valuable in banking, where maintaining accurate and tamper-proof records is critical to operational integrity. As more industries recognize the multifaceted benefits of these security features, the adoption of blockchain as a viable solution for enhancing security is expected to grow rapidly. Ensuring transparent and tamper-proof transactions will bolster user confidence and empower organizations to implement more effective risk management strategies, ultimately leading to a more secure financial landscape that can withstand emerging threats and challenges. Despite the clear advantages of blockchain technology, traditional banks may exhibit substantial resistance to its adoption due to various challenges. The entrenched centralized model of banking and concerns over losing control while ensuring regulatory compliance create hesitation among financial institutions. Furthermore, integrating blockchain into existing banking systems necessitates significant financial investment and a comprehensive technological overhaul, which can be daunting and disruptive to operations. Cultural resistance to change, particularly in an industry characterized by conservative practices and risk aversion, further complicates the situation. Ongoing uncertainties regarding legal frameworks also serve as considerable barriers to progress, making it difficult for banks to navigate compliance requirements while adopting new technologies. However, some forward-thinking banks are beginning to explore blockchain's potential, suggesting that gradual integration rather than an outright transformation may be the most pragmatic approach. As the technology matures, banks must be willing to adapt to remain competitive and relevant in an evolving financial landscape. Collaborative efforts between traditional banks and technology providers will be essential to overcoming hurdles and realizing the full potential of blockchain in revolutionizing banking practices for a more secure and efficient future.